The first scalping strategy takes less than 30 seconds to spot on the chart, but most traders completely ignore it. You open your 15-minute chart, you spot a single candle, and you draw its high and low. This creates a range. Now you simply wait and watch what happens next. If the next candle breaks the range and then closes back inside it, that's a liquidity sweep, and that becomes your signal. Now switch to the 1-minute chart. You'll notice the same thing. The high and low of that 15-minute candle now form a range on the lower time frame. Price breaks below the range and then closes back inside it, forming a liquidity sweep. That's your entry. You enter at the close of the candle that moves back inside the range. Your stop loss goes below the range, and your target is the next key level. Look at what happened. The market moved straight to the target. Now let's look at another real chart example. Again, start with a single candle. Draw its high and low to form the range. The next candle breaks above the range, but then closes back inside it. Now switch to the 1-minute chart. Observe what happens. Price breaks the range, then closes back inside it, creating another liquidity sweep. You enter at the close of the candle that moves back inside the range. Your stop loss goes above the candle, and your target is the next high. Look at the result. The market reaches the target as expected. This strategy is not a holy grail. Always use proper risk management and trade it in the direction of the trend as explained in my previous videos on the channel. Now let's move on to the next strategy. Look at this chart. You've identified a clear support level where price has bounced twice. It's a key level that catches everyone's attention. Now look at what happens next. Price approaches that level again. You expect another bounce, so you place your trade. But instead of bouncing, the market drops just enough to hit your stop loss, and then immediately reverses. Annoying? Yes. But here's the reality. Institutions do this on purpose. They hunt stop-loss orders, collect liquidity, and then push the market in the direction they really want. Now let me show you, in 30 seconds, how to trade the stop-loss hunt strategy. You identify a key support level. Price hits the level and reverses. It pulls back, comes back again, and reverses again, so the level is clearly respected. Now price approaches the level one more time. A rejection candle appears at the level. At this point, you do nothing. You simply wait and observe what institutions are doing. Look at what happens next. Price suddenly breaks below the level and then closes back above it. That's a clear stop-loss hunt. Now you enter at the close of the candle that hunted the stop losses. Your stop loss goes below the candle, and your target is the next key level. Look at the result. The market moves up exactly as expected. Now let's look at a bearish example. Price hits this level and reverses. It hits it again and reverses again. That forms a clear resistance level. Now price approaches the level once more. A bearish candle appears, and retail traders start selling. But look at what happens next. Another candle forms. It suddenly breaks above the resistance level, but then price closes back below it. That's a stop-loss hunt. You enter at the close of that candle. Place your stop-loss above the stop hunt candle, and your target is the next level. And look at the result. The market moves straight to the target. Now you may feel smarter, but remember, the market is often smarter than you, because sometimes there is a stop hunt of the stop hunt traders. Here's what that means. You spot a stop-loss hunt at a support level. You feel confident, you place your entry, your stop-loss, and your target. You're ready to make money, but look at what happens. The market hunts your stop-loss and then moves to the original target. That's what I call the stop-loss hunt of stop-loss hunters, because the market is always one step ahead. So what should you do? You stay calm and you re-enter. Look at this example. You spot a stop hunt at a resistance level. You enter the trade, but another candle forms and hunts your stop-loss. You don't get emotional. You don't get angry. You simply re-enter with the new candle. And look at what happens next. The market moves straight to the target. The stop hunt of stop-loss hunters doesn't happen every time, but when it does, now you know exactly what to do. Now let's move to the next scalping strategy. Look at this 15-minute chart. You can see the market forming one strong bearish candle, followed by another one. At this moment, the market is not just moving down, it's entering a state of fear. Traders who bought earlier are panicking, stops are getting hit, and emotions start to take control. Now switch to the 1-minute chart. Here, you don't enter immediately. You wait for a signal that shows resistance to that fear. And that signal is a bullish pin bar. Look at this candle. It forms right in the middle of that panic. It's like a small pocket of strength inside a fearful market. But you don't trade the pin bar itself. You wait for something more powerful. You wait for the failure of the pin bar. Look at what happens next. The market breaks through the pin bar. Fear takes over again. The small resistance disappears. And that's your entry. You enter at the close of the candle that breaks below the failed pin bar, a stop loss above the failed pin bar. Ride the momentum and scalp a few quick pips while fear is still controlling the crowd. Now look at another example. This time, the market is trending up. It forms one strong bullish candle, followed by another. Here, the market is in a state of greed. Traders are chasing the move. Everyone wants to buy before the price goes higher. Now switch to the 1-minute chart. Again, you don't enter immediately. You wait for a signal that shows resistance to that greed. And that signal is a bearish pin bar. Look at this candle. It forms against the bullish pressure. It's like a small wave pushing back against the crowd's excitement. But once again, you don't trade the pin bar itself. You wait for its failure. Once the failed pin bar gets broken, you enter right at the close of the candle